Hi everyone, Maria Tyler here. We're going to restate our balance sheets in this video. Just like the statement of changes in equity, this statement is fairly straightforward to restate as well. So in the balance sheet, we are separating just the assets and liabilities into our O and F categories. Equity, we simply carry it across. Okay, so we get a new accounting equation in the restating the balance sheet. It becomes, instead of assets equals liabilities plus equity, which is our fundamental accounting equation, our new accounting equation is net operating assets equals net financing obligations plus equity, okay? And we're going to use our workings area below the balance sheet, below at the bottom of the spreadsheet, to split our cash into operating and financing. Now again, it must be fully linked, and we've got a few checks that I'll come back to once we finish restating our balance sheets. Now remember, we don't classify headings and totals, just like in our restated statement of changes in equity. Okay, now in chapter 4, again, you should have read it by now, hopefully multiple times. Hopefully you printed it out like I did when I was first restating, print it out and have lots of scribble on it. It's covered on pages 10 to 14. So if I quickly flick there, this is page 10, and Martin actually takes you through how he restates Ryman Healthcare, which is his example company. Now, I'd like to point out on page 11, this little section here, where we actually split cash into O and F, okay? So Martin gives us a guide here of how much we'll do the split by. And since cash is usually the first item that we restate, we'll be doing this first up when I do our restating. Okay, so I'm going to be using Wesfarmers and restating their balance sheets. This is the set out based on Martin's example in chapter 4. I've created this layout based on my understanding of his chapter 4. So we're going to start by putting our O section first. So we're going to list out our operating assets, then our operating liabilities. Then we will get a total, which is called net operating assets, and that's simply taking one away from the other. So operating assets minus operating liabilities. Then we're going to do our F section. So we're going to classify financing liabilities, and just to confuse you further, we changed the terminology. We call them obligations rather than liabilities. So it becomes financing obligations, meaning something that we owe or we are obliged to pay. So same concept as a liability. And financing assets, and we take one away from the other again, and we call it net financing obligations. So just remember, financing liabilities becomes financing obligations, okay? Now, we put it in that order. Instead of FA minus FO, we do it inversely, simply because most companies have a larger amount of financial liabilities, i.e. bank loans, than they do with financial assets, usually cash. So because of that, we just flip the formula so it usually stays positive. However, if your company has larger amounts of financing assets than financing obligations, then this will become net financing assets for you. So in Wesfarmers' case, they have a large amount of debt than assets, so they actually do have net financial obligations, and most companies are the same, hence why we generally stick with this formula. But again, if yours is different, you simply inverse it. And then we carry across equity at the bottom. Right underneath the total equity line, we put another line for net financing obligations plus equity. And that is the line that has to match back to our net operating assets. Remember, with our new accounting equation, NOA equals our net financing obligations plus equity. That's our new accounting equation. So we have to make a line so that we can actually check that. Okay, so let's go and restate. So simply pick up from where we left off. So I'm going to start with a heading, and I'm going to call it operating assets. And I'm simply going to go through and classify now all of the items on my balance sheet. So you can see my cash and cash equivalents is going to be O and F, because I actually have to split my cash between the operational part and the financial part, and Martin explains why we do that in chapter 4. Receivables, trade and other, for me, I know that's operating. Receivables, finance, advances and loans is actually financing for me. Inventories is to do with day-to-day operations. The derivatives in Wesfarmers are also to do with operations. Now, your firm may not be. Your firm may have some financial derivatives. So you will need to explore the notes to your company's financials to have a look and see what actually these items are for your particular company. And they will be different for every company. And again, with other. So other usually doesn't tell you very much, but in the notes, they will usually define what is in that other or the miscellaneous assets. So for me, I know Wesfarmers is operating. If they don't tell you, just write in your Word document. If you can't find anything, just write that you are assuming that it is operating. Most of the items in your balance sheet will be to do with operations. Okay, investments in associates and joint ventures is going to be financing for me. Deferred tax assets to do with taxation on operations. Property is also owed. Plant and equipment, goodwill, intangibles, derivatives, and other. Okay, so I've classified all of my assets as into O and F. I'm going to keep going. I'm just going to classify the whole balance sheet now. Be done with it. So trade and other payables is to do with operations. Interest-bearing loans and borrowings. This is my financial obligation, so that's actually F. Most companies will have this large amount of bank loans. Income tax is operating. Provisions in my case are operating. Derivatives in Wesfarmers' cases are operating, and their other is also operating. Non-current liabilities, so again, their bank loans are financing. Provisions are owed, derivatives are owed, and their other is owed. And we don't need to classify equity. And remember, of course, we don't restate or classify headings and totals. Hence why I haven't classified any of my headings or any of my totals. So again, you do need to go through line by line for your company's balance sheet and understand what each of the items are before you can actually classify it. Okay, now that I've done the hard part into O and F, let's go and actually split my cash, because you can see it's the first item that I'm actually going to be listing under O. So let's go and split it. So it would be my cash right here, and I don't know the figure yet to put there because I actually have to calculate it. This is my heading, so let's start. Okay, so I'm trying to get a figure from the operating side of my cash, and we're actually going to determine a figure right down the bottom, scroll right to the end, and we're going to write here something like the allocation of cash to O and F, okay, so that my marker knows that I've thought about it and I've actually allocated it. Let's link it to each year. Doesn't matter which year you link it to. Let's just carry it across. I'm just going to make this slightly smaller. Okay. Let's see if I can, actually let's go back to 100%. All right. So firstly, I literally just want to link to the full figure for my cash. So let's link directly to here and link it directly to the full figure for my cash, because that's the amount that I want to carry across to my financial statements and split up into O and F. Okay. Now I'm going to link my revenue again, because Martin explains, I'm going to go down to my income statements and link to my revenue. I'm going to call it revenue, but I'm going to link to my total revenue figure. You want your total revenue figure, okay? Not just your other items of revenue or your sales. You want to link to your total revenue. Now, if you want to link to just your sales figure and you feel that's justified, that's okay to do as well. Just make sure you write about your decisions in your Word document. Now, the reason I'm listing my cash and my revenue is in Chapter 4 of the study guide, it tells me that generally firms only need to keep between 0.5% to 1% of their sales or their revenue for operations. Okay, the rest can actually put into financing the company. So we are actually only going to allocate a small amount to operating assets. But before we know how much to allocate, we actually have to figure out what percentage our cash currently is out of its revenue, out of our company's revenue. So this is what those two lines are. I'm actually trying to work out what on earth how much the percentage of my current cash is out of my revenue. Yes, I'm going to write that so that we know what we're doing. So percentage of cash out of operating revenue. Okay, so again, if you've linked to sales here, just your sales figure, that's fine. Just make sure you write about why you've done that. And we're literally just going to go equals cash divided by revenue. Change that to a percentage and take it to 1 decimal point. Okay, so I'm going to choose to allocate 1% of my cash to operating. So 1% of revenue of out of my cash to operating, and then the rest of my cash I'm going to allocate to financing. So I can do that for each year except for 2016 because look, this is greater than 1%. That's also greater than 1%. So cash was greater than 1% of revenue in those 3 years. And in 2017 it was 1.5%. But in 2016 it wasn't quite 1%. So in 2016 I'm going to allocate the full amount to operating. And there'll be nothing that I allocate to financing in that year. So I'm choosing 1% as my 1% of revenue, or 1% of sales in my case. You can choose whatever figure you like, you just have to justify it. So just make sure that if you choose 0.5, that's fine. If you choose 1%, that's fine. You can also choose any other percentage you like. Just write about why you're doing that. So your company might actually need more cash in the business for various operations, depending on the industry that your company's in, and that's fine. Just make sure you write about it in your Word document. Okay, so now that I know that I can actually allocate my cash in 3 years to O&F, I'm going to write, this is my allocation of cash to operations, and this is my allocation of cash to financial activities. So I'm going to allocate 1%, so equals 0.01 of revenue. Okay, so that's how much I'm allocating in each of these years, except for 2016, I'm allocating the full amount of my cash. Okay, so in those other 3 years, I'm allocating 1% of revenue. So make sure my formula links to the revenue line. It's 1% of revenue, not 1% of cash, 1% of revenue, remember? If you're not sure why, you need to read chapter 4. 1% of revenue. So allocating 1% of revenue, except for 2016, because we didn't even have 1%, the full amount is operating. So I'm going to link to my full amount of my cash in that year. Then the remainder of my cash in each year goes to financing. So now I link to my full cash amount. That's the amount I'm allocating. Take away what I've already allocated to operations. The remainder has to be what I'm allocating to financing. Now, of course, in 2016, I allocated the full amount of cash to operating already because it wasn't quite 1% of revenue. So I didn't have anything to allocate to financing in that year. Just as a check that you've allocated your cash, not your revenue. So make sure you get the distinction right. We are allocating cash. We're simply splitting up cash between O and F. Okay, you can check these two figures. Do they match? If they match, you know you've split them up right, because these are the cells we will link to when we get to those sections. All right, now we've done the hard work down here. This will make life a lot easier for us. And it also tells our markers we've done our background work. So let's go and link to the O part for cash. So cash and cash equivalents, the O section is down here. This is my allocation of cash to O. Simply carry it across. Now, continuing with my operating assets. So again, remember this is the set out. We're in this section at the moment, filling in operating assets. We've split our cash, which is good. I'm going to link to everywhere that I see operating assets. That's in this section. Anywhere I see O, I'm going to link to. So here's another O. Let's see. Here's another O here. There's 3 O's. So I'm just going to link 3 down and fill without formatting. And again, let's go and get the figures for those. So receivables, trade, and other. And inventories. And 3 down from inventory. So this one, and I can also fill and drag down. Okay, fair enough. Just linking it. Another way to link it to get around Excel. Okay, keep going, because I've only done my current assets now. Now I know all of my non-current assets except for the first one are O. So I'm going to link here and I'm just going to drag it down. Fill without formatting. Okay, we don't need totals. Get rid of those. Oh, hang on. Let's do one at a time. Doesn't like it otherwise. And let's link the figures. Deferred tax assets. So I'm just simply linking all of my items. Just doing operating assets. We're only in the OA section at the moment. Okay. Now let's do a total. Total of operating assets. So equals the sum of all of these lovely babies. Drag it across and that's done. Make it a bit pretty. Okay. That is the operating assets section done. Now let's do operating liabilities. Put a heading for operating liabilities. And I'm going to start linking. So go to our liabilities section. We'll come back and we'll link for the financing once we get to the financing section. We're just doing O at the moment. Okay, so go down to our liabilities, and everywhere I've got O, we're going to link. So I'm going to start with there. My trade and other payables. Link to trade and other payables figure. Carry it across. Okay, where else have I got O? Not my loan, my income tax, and there's 4 down from that. So I'm going to just drag and fill. Save me individually linking it. So again, carry the figures across from income tax. Make sure you're linking the right figures. I've had more than once a student has accidentally clicked into the wrong cell, and just so they've double counted one of the other items by accidentally clicking into the wrong figures. They put the right heading name and accidentally clicked into the wrong cell. And actually it was one of my HD students in Mackay that did the last one that I remember. So it can happen to anyone. Okay, and then I've got 3 O's down here. So 3 O's in my non-current liability. So I'll fill down another 3. And make sure I'm linking to the right figures for provisions. Okay, so that's my operating liability. So let's put total operating liabilities. And do a sum equals the sum of all of those lovely babies. Okay, now we have to do a total. So remember our layout. We've done operating assets and operating liabilities. Now we have to total net operating assets, and that's equal to those two, the difference between those two. So we're going to actually write that, net operating assets. And I want you to write the acronym NOA, because just trust me, it's going to make your life so much easier when you get to doing your ratios, because you can just look for the acronym. So equals our operating assets minus our operating liabilities. Oops. Okay. So make that a nice, okay, nice formatting. So that's our O section done. Now we're going to go and do the same thing for our F. So let's start with, now remember we're starting with financial liabilities, which we're calling financial obligations. So that's going to be my heading. Okay, now let's have a look. And everywhere we've got financing liability, so we're in our liability section now. So we just need to classify everywhere there's an F, we need to link it. So we've only got 2. Well, I've only got 2, row 54 and row 61. So they're both, this is my current loans and this is my non-current bank loans. Make sure I'm linking to the right figures. So my current, now you can combine these into one, that's fine. And so you could link that and just put equals this, so this figure plus this figure, and just have it as one line. And that's fine as well. I'm just going to leave -2 because I've always done it that way. which doesn't mean it's the best way. It's just the way I'm doing it. So I don't mind whichever way. If you just like to see that figure as one, that's great. Just add them together in the one line. Okay, so that's all my financing obligations. I've actually classified, done all of the O's, and now I've done all of the F's. So my liabilities are done. I have restated all of my liabilities into O and F. So I'm going to put a total here, total financial obligations. Which is the sum of those two amounts. And now I'm going to have to add a few more lines in. Just quickly format pane of these, make my life easier. I'm going to need a few more lines than what was there. So we've done my financial obligations. Now we're going to do my financial assets. Okay. Now remember, we split cash up already. And if we went up to the assets, because we're going to do all of our F assets now, the first one was cash and cash equivalents. So we've already calculated that figure. So link to the heading for it. But when you're actually linking the figure for it, don't forget to link down in your workings here, the allocation to F. All right, so I'll have a figure in here for every year except for 2016, which should be 0. Okay, so that's my first one. Now I'm going to go back to my assets and link everywhere else I have F. So I've got one F there and one F in my non-current. So we'll do this one first and link the figure for those receivables, which is only in 1 year, I think. And I had one amount. I'm going to do my investments as F. They're not always F, but I'd like to use this as an example anyway. Okay. Right, so this is my total financial assets, which is the sum of those. Okay, so I've done financing obligations and financing assets. Now I have to do my total for them, which we're going to call net financing obligations. So I can check that they're bigger. Actually, in some years, look, in this year, for once, it's actually the other way. I actually have net financing assets. So you can write net financial assets and call it NFA if you'd like to. So I'll put net financial assets or net financial obligations, NFO. Okay, so you can put NFA if you've got NFA. And remember, write the acronyms in. So if you've got bigger assets in all years than obligations, you can write net financial assets. In all of my years, though, this total here is greater than this total here. So I have larger obligations than I do assets. So for me, except for this last year, 2019 financial year, I actually have NFO. Okay, it doesn't matter. The formula will still be the same, but just make sure you identify this line. It's very important. So it's this one minus this one. Okay, so you can see in 2019, I actually have net financial assets, and in the other years, I actually have net financial obligations. Okay, I like to write it as this one. I'm just going to leave it as that. So net financial obligations for every year, except for this one, it's negative, so that's telling me it's actually net financial assets that year. Now, we just simply have to carry across our equity, and that's literally all we're doing. We're just linking equity. So go down here, right till you see equity, and I'm just going to copy 6 lines down. Fill without formatting. Take away the bolding. And will that one turn out blue? Okay, get rid of that. And I'm literally just going to link my 4 items of equity. 1, 2, 3, 4. That's all I've got. 4 items. just carry them across. We're not restating equity. We're not doing anything else with equity. We're simply just restating it. Fair enough. I'll do them individually. Excel. Okay, my total equity is going to be the sum of all of these items. And so again, make it a little bit pretty. Now there's one more line I have to do. I have to make a line for net financing obligations plus equity. So net financial obligations plus equity. And this should match to my net operating assets. So where's my NFO? There it is, plus the total for my equity line. So this figure here that I'm going to highlight, let's put it in put it in orange, should match to this figure here, and it does. So I'm happy that that actually matches. So let's save that. Okay, and that's pretty much my restated balance sheet. Now, in the week 6 lecture, I go through some tips and hints and checks for what to do when things go wrong. Here are 3 checks that I've put on the slide. If you find that your line, your new accounting equation does not balance, mine did, so I'm happy I did it right. But if you find that it doesn't, don't stress out. There are a number of easy tips and checks you can do. The first check you can do is see if your total for operating assets plus your financing assets equals the original total for total assets, because remember, you've just split that up. So go to this total, so operating assets, and add that total to your total for financing assets, and then compare that total against what you had for total assets, because remember, that's all we're doing is just splitting that up into O and F. And then do the same thing for liabilities. So again, we're just splitting liabilities into O and F. So you can go and get your totals for operating liabilities and financing liabilities. So here's your total for operating liabilities, and your total for financing liabilities, which we're calling obligations, and add those 2 up, and then check that they do match the total for your total liabilities. Okay, and if it doesn't, you know you've made a mistake either in transferring one of your assets, so you'll have to go back through line by line, or in transferring one of your liabilities, splitting it between O and F. So again, you have to go through line and line. And also your equity should match what the closing balance for equity in your restated statement of changes in equity. So just check again in your balance sheet that the total equity figure here, the 9971, 22754 and so forth, also matches the total balance for equity in your statement of changes in equity that we just restated in the previous video, and it does in my case. So that's your restated balance sheet.